And it is time for the word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee, strategy founder, Michael Lee, and Laffer Tengler, investment CEO and chief investment officer, Nancy Tengler. Great to see you guys this morning. Welcome. Mike, kicking things off with you with a look at markets, which are, I feel like, could be the quiet before the storm, calm before the storm, because we've got a whole host of earnings for the first quarter coming out, and we are going to hear from managers about what the rest of the year looks like. We've got a busy week on earnings. Markets fractionally moving today. Bank of America will report tomorrow. Goldman Sachs, Netflix as well tomorrow. Morgan Stanley, Tesla reporting on Wednesday. What kind of earnings and guidance are you expecting, Mike?
You know, Maria, I think earnings estimates, probably not as much for this quarter, more so for the rest of this year, are completely out of touch with reality. The consensus estimate for the fourth quarter this year is 8% growth to take the calendar year slightly positive. So right now the estimate is for 0.8% growth for the calendar year of 2023. I just don't see how earnings growth is going to accelerate as the economy is decelerating. I'd expect to see some good numbers from these banks, and surprises like we saw from JP Morgan on Friday. I'll have you... there's a lot you could take away from that number. Most of their earnings surprise came from the fact that they could take their customer deposits, park it at the Fed, and get 4.75% from the Fed. Whereas their capital markets division, what I would call a leading indicator for the economy, was down something like 25% year over year. I think we're going to see more of the same. And after Silicon Valley Bank and Provident Bank went under, lending standards have tightened to the tune where we saw the largest two-week decline in lending year over year. So I think you're going to see lots of stories about margins compressing, earnings growth compressing, in fact, contraction. And I think we're going to hear a lot more about what the uncertainty going into the rest of the year. I think earnings estimates are going to come down. Historically, when you see a collapse in housing and manufacturing the way we saw in 2022, the following year you have a 10 to 15% earnings decline. And keep in mind, estimates are still for positive earnings growth. I do not know if the bottom will fall out of this market, but I am fairly certain the bottom is already falling out of this economy.
Yeah, I mean, it's pretty incredible, Nancy. You got, a bottom falling out of the economy, inflation 2 or 3 times away from where the Fed's target is, and yet look at technology stocks year to date. I mean, we are looking at a huge rally in tech. The NASDAQ up about 16% overall, but you've got some outsized moves. Look at Meta, up 84% year to date. Apple up 27%. Tesla 50%. You said the digital economy is a secular tailwind to old companies embracing technology. So should we be buying these stocks here after these huge run-ups?
Good morning, Maria. I would wait a little bit. We've been taking some gains. We were advocating that investors add to technology and consumer discretionary in the...
You think that means we're going to see a big sell-off later in the year?
Well, Maria, I liken this to, well, both bond markets and stock markets are rallying ahead of what are perceived Fed rate cuts. I think the bond market is rallying because they expect some sort of complete and total train wreck in the economy, forcing the Fed's hand. And I liken the equity markets to a child playing on those same train tracks, just hoping for the rate cut, not seeing the train wreck coming. Because listen, markets can remain irrational far longer than you can remain solvent. But so stocks may soldier in there, but I'm very cautious at the moment.
Yeah, well, we'll see. And remember what Larry McDonald said, we're going to get a rate cut before July 4th. If we don't, markets will be highly disappointed. Guys, it's great to see you both this morning. Thank you. Mike Lee, Nancy Tengler, always a pleasure. Have a great Monday. Much more ahead this morning coming up, victims of violent crime.